One of the things you'll hear in our videos, we talk about contextual awareness. And what we're talking about when we say contextual awareness, we're talking about things like, and reading the larger chart, breakouts of Fibonacci areas, when the Fibonacci support holds, followed by more Fibonacci support holding, and then ultimately the expectation is that we're going to make it up to the next Fibonacci resistance. Which brings us to the next wonderful termination low that makes a really strong bottom, is a double divergence at a pivot stop out line. Also at Fibonacci, this is very helpful, and traditionally after the second divergence from a pivot stop out, we can expect the trend to continue. Now, because we expect the trend to continue, this is where we can start looking at our 5-1 charts and start to look for breakouts and trend trade rules to be true. So let me circle, there's the first divergence, and then this is the second divergence. So you can see my circles are on the large chart, 2 divergences, so I don't really need to see that anymore. What I need to do is spread out my large chart so I can watch my trigger line configuration, make sure that I've got a strong trigger, and then I can start watching the 5-1 chart and watching for trend trade rules to be true. And again, the temptation for a lot of people is to try to jump in, trying to catch the bottom or catch the top, which is not what is advisable for new users of our software. What we're looking for right now on the 5-1 chart, and you can see it's pretty easy, we're waiting to get above that red Fibonacci, which it just did, and it turned blue. So now we've got all of our trend trade rules met. We've got a strong bottom, strong triggers up, and now we're going to go ahead and place a trade. So what we need to do is look at our large triggers and our fibs and our mid bands, and we need to go ahead and put an order in by right clicking on the chart, and we'll get our order in here real quick.
Order pending.
And again, we're trying, there's a window, so from the mid bands to the fibs to the large triggers, because we've been a little bit range bound, I have just missed the entry right there. Okay, we'll watch it. And again, this is where, do you jump in? Do you hope you jump in? The one thing that, looking at this 5-1 chart, you can see that the large triggers are not really above everything. Again, maybe if I had an order right there, I would have been filled. Again, hopefully this does not run away without us. But traditionally, when the triggers on the 5-1 chart are a little below the fib, they usually make it to the large triggers. So I'm just going to stay put for a second and see. Oh, there we go. Now they're moving up. So look, I'm going to move this order up to the fib, and they see how the triggers are more at Fibonacci and mid-band. Notice also in the 5-1 chart we have a divergence from the high. Usually they come down and stop out the last low
Order filled
on the 5-1 chart, which should get us a fill. And again, I want you to remember, it's been discussed in a prior video, I'm not worried as much about the divergence line only on the 13-2 chart. Could it stop the market? Yes. But because we had that second divergence from the low, from fibs, from a pivot stop out, and our triggers are strong, there's a really good chance now after that type of bottom that we're going to finish the move to the upside. And that's really what we're looking for. We're looking for that move to finish, and now we'll watch the trade a little bit. And since this is running long, I'm going to shave some of the time off. So you can see we're pushing up
Target
towards
filled.
our first profit target, which just got reached. So we can go ahead and reduce our risk on our market now, and we could put our stop at break even plus a tick. And as we go forward, I want to talk about management a little bit. Divergences and multiple divergences. Traditionally, if you have a very strong low, which we have, and you have very strong trigger lines on your 13-2 chart, you're going to want to watch the small trigger lines versus the large trigger lines on your 5-1 chart. And as long as the small trigger lines remain outside of the large triggers on your 5-1 chart, just like in our management section when you read into it, we're going to want to stay in that position, even if there's 2 or 3 divergences. And again, if they keep getting higher, that's better. If we have a lower divergence, we'll probably take the trade off. So as long as we keep making higher divergences, and on the 5-1 chart, our small triggers remain outside of the large triggers, we're going to continue holding this position. And for the sake of time, I shaved off a little bit here for you. And you'll notice we went up a little higher and we made another divergence. And with that higher divergence, that was the last time that the small trigger lines remained outside of the large trigger lines. So what we're going to want to do in this instance is we're going to want to start to trail behind pivots, new higher up bars. And if we take out a last low, then we're probably going to be done with the position, maybe look to re-enter at a lower spot. If they don't exceed a prior low pivot, then we'll stay in this position until we reach resistance. And again, I'm going to shave a little bit more time for you here. And as we go up, now we can start trailing our stop. Well, we just hit our profit target. And I hate to throw you straight into the next lesson, but if you have a Fibonacci breakout with a strong trend, with a strong prior low, we need to go ahead and get into another position. So, again, this is rolling right into strong bottom, trend trade long up to resistance. If the resistance breaks, now we can take more trend trades in the direction of the trend, trying to get yet again to the next Fibonacci resistance. So this lesson is running a little longer than I thought, but what a great opportunity to see not only a great trend trade up to resistance, but a breakout as well. So now we've got a breakout of a fib, triggers are still strong. We got into a trend trade at the 1-to-1s, multiple fibs, large triggers. And if we get an up pivot here, traditionally on breakout trades, I really like to trail stop behind a low pivot, which you can see we got here. So a couple ticks behind it. And now we can relax and wait for our first profit target to get hit. And then again, the triggers are really strong. There's the first profit target. So this is going moderately quickly. Again, the target for what we're going to do is the next Fibonacci resistance. So we've already hit our first $200 target, and very quickly you can see we got to our next target. And very quickly you can see we got to a termination condition on the high, which yellow 1-to-1 dots and a pivot stop out on our 5-1 chart is the end of the move. So when you go back and look at it, you can see we got a big chunk of the move to the upside with a very strong bottom, followed by a Fibonacci breakout with a strong trend. So just to kind of take a look at it on the 13-2 chart, this is a very, very typical look, which you'll see in a strong move.